Hey, Anthony. So we are back talking about FATCA. As we continue our FATCA series, we're now up to video number 8.
Excellent.
Yes. FATCA, in simple terms, is the federal law that requires all U.S. taxpayers, even those living outside of the U.S., to report their non-U.S. financial accounts yearly. Okay. Now, we've already talked about the basics of FATCA, why it's so annoying, filing thresholds. Today, we want to talk about SDOP versus OVDP. So what's all the acronyms?
Yeah, right. So we have Offshore Voluntary Disclosure Program, right? That's the full Offshore Voluntary Disclosure Program. That's our OVDP. And then we have Streamlined Domestic Offshore Procedures.
Wow.
Is our SDOP. And that's the Streamlined program. And that is actually part of the OVDP, but a process. But OVDP versus SDOP is the best way to say it.
Yep.
And you might be asking a question.
Well, my first question is, what the heck are these programs? So just so people understand, these programs, the government made them for those that have offshore accounts to give them an opportunity to get into compliance. So that's what we're talking about. But why aren't we including SFOP, which is the Streamlined Foreign Offshore Program?
The reason why is there is no penalty. So that's what this is really about, is describing the different penalties of OVDP versus SDOP, but there's no point to discuss SFOP because you have a zero penalty. If you could do that, it's always the best deal.
Okay.
Take it. We're going to go over some examples of where the full, more onerous OVDP can actually give you a lower penalty than the SDOP, even if you don't go through the onerous opt-out. It could just be the best deal off the shelf. And so you really want to be careful of which way you're going when you're doing this. And I will say that this is probably the most complicated, second most complicated, because we have done PFIX, we've done foreign life insurance. Well, third most, it's up there. On the difficulty level, it's up there. So if you are saying, what are they saying? They're going too fast. I'll try to talk slower. And this is a difficult subject to understand because we're dealing with some of the craziest programs that don't really have any review. The IRS makes it up, puts it on a website, and it sees if it can work. The IRS couldn't imagine every sort of application of it, and where we end up with somewhat ridiculous results.
Right. I mean, we're literally learning new things about this every day.
And so is the IRS.
Yep. All right. So, Christopher Chen, if you can please pull up our whiteboard. So, Anthony, you can go over some of the different scenarios and the penalties that could be accrued.
Okay, so I wanted to give a very simple example here. And on this board, I have, let's just assume that there's a U.S. person with two offshore accounts. There's offshore account A and there's offshore account B. There's $50,000 in both A and B. And in both accounts, no FBAR and no 8938 was reported. And there's the A and B. Look, there I am, going back. Look at that. Look at that replay.
It's like a football game.
There it is, right. A little ahead of it. So no 8938. And now here's the thing. There's reported interest. The interest is reported on a Form 1040. So in this case, am I really going bald back there? Hey, why didn't anyone tell me that? Oh, my God. Anyway, so delinquent, this is the most depressing video I've ever watched. Delinquent submission only. That you don't there's no penalty. All you need to do is file your FBAR and your 8938.
Got it.
Now I'm going over to scenario number 2. Okay? We're going to change the facts a little bit. I think my hair is just matted.
Yeah, I think
it's just matted.
Yeah.
Yeah, it's just matted
Maybe
a little
just
bit.
The gray.
Yeah. That's interesting. What is it? All right. So we have one account. I think in this scenario, neither taxes are paid. So we have an SDOP penalty of $5,000. Okay? Now, this is where it's going to get interesting because here I'm reporting in count A, I'm reporting the interest, and count B I am not. So you would think the offshore penalty would be $2,500, right? But it's not right. It's actually $5,000. The thing about the SDOP is it springs the accounts that would be delinquent FBARs 8938s only into the penalty base if one thing is required to be in the SDOP. So the $50,000 account that was not reported pulls in the $50,000 if on its own would have been no penalty whatsoever. So it's sort of a nutty little thing.
It's madness.
Right. Now, in that case, it's a $2,500 difference, right? So whatever, you're just going to do it. You're not going to go with full OVDP.
Mm-hmm.
So this is what? Oh, scenario four. Okay. I grabbed my notes, which are important.
You learned a lot today from one of our own in-house attorneys.
Yes, this was Robert Hansen helped me tremendously with this. He was
very patient.
I knew there was something there, but I couldn't quite understand it. So here we wanted to show a more dramatic example. Mm-hmm. We have account A of $1 million and account B of $100,000.
Okay.
And I think we're going to do no FBAR, no 8938 in account A. 80, come on, 89.
As a side note, we do have 2 videos, or at least one about Form 8938, the deadline and the thresholds.
Right.
So that's something you can refer to in the playlist as well.
That's right. And we're going to have an upcoming one on account valuations.
Yep.
And I think also the assets that need to go in there, because it's a really crazy list. So those are going to be coming up, I think, later on. Those are going to be the next 1 or 2 in this very shortly. And why am I taking so long to write that? Okay, so account A is going to be reported income, right? The $1 million. And this makes sense because if you have the $1 million account that you know is yours, there's a good chance that you might be reporting that. Mm-hmm. That you're like, oh, yeah, I know I have to report that, the big one.
Right.
But what happens a lot of times is a person doesn't know their account holder on an account, or they didn't know they had it. They inherited it. They didn't realize it was there. So you can have someone who has a much smaller account that doesn't report the income. And so this is what's really interesting. In a full OVDP, right, I'm pointing the $1 million. Look at that. It's reported income. Full OVDP, that $1 million does not go into the penalty base. It stays all out. Now, if that was the only account, we would be, for $1 million account, we would file FBARs, we would file 8938s. Mm-hmm. However, we have account B, which is not in compliance. If we go full OVDP, it's only account B, $100,000, 27.5% of that. Mm-hmm. You have a 27.5% or 27,500% penalty plus any unreported taxes of the last 8 years.
Okay.
Okay, now I'm showing the comparison. If we go SDOP on this, it gets a little nutty because we're going to add that $1 million to that $100,000 for the penalty base. So our penalty rate's going to decrease from 27.5% to 5%. However,
which in theory,
right. But when your penalty base goes that much higher, I think it's 50,500 is what I have on here. Mm-hmm. And I had to get my eraser. Okay, there we go. Official.
What a huge difference.
So right. So by doing the streamlined, right? This is not a crazy hypothetical that comes up. This does happen. People know they have to do something. They don't know full compliance. Yep. A lot of people have some sort of partial compliance. So this is a place where partial compliance can really hammer you pretty badly.
Wow.
Now, and I think in this case, if that's what we're looking at, these are the numbers we're looking at, $55,000 SDOP versus $27,500 for full OVDP, we'd still probably push our client into SDOP because, again, 3 years of taxes versus the 8 year of taxes of full OVDP. And then, attorneys are awesome people and deserve all the fees that they get. But if we're going to do full OVDP, it's a bit more than a streamlined because there's a lot of back and forth with the IRS, and there's also 8 years. Yep. So that's probably a close call where we would really look for SDOP because it's a bit easier to do, even though you're going to have a higher penalty. Your taxes are going to kind of equalize. Everything will sort of equalize, and the process is going to be much, much quicker. Full OVDP, 2 years is not unreasonable to expect. Wow. It's an unreasonable amount of time, right. But what to expect is not. We still have OVDPs, OVDIs from 2009 still open that we opted out on, and we're dealing with appeals on that. I mean, that's just something to think about. that if we don't get the correct, well, no, they did make the assessments, but the 6-year statute of limitations on FBAR assessments is up. That's how long the case has been going, but we did extend it because otherwise they would have done the quick assessment.
Right.
But it just sort of gets ridiculous. So now I think this is where I'm going to go to a very extreme example, adding a digit there. So, again, think about it. This is actually maybe even a more realistic example. Somebody knows they have a big account, the big account that's responsible for their entire lifestyle, right? Yes, I'm going to report that. Did I know I had to file an FBAR? No. Did I know I had to file an 8938? No. But I reported the income, or somehow I reported some of the income, right? So in that case, right, in full OVDP, we know that stays out of the penalty base, okay? And now we're going over B. It's the same thing, $100,000 of unreported income, no FBAR, no 8938. So just some of the differences here. Right, as we get to some of the calculations, your penalty base is $10 million. Oh, wait, did I put 100? Wait, what did I do there? I did $100,000. Oh, okay. I'm doing full OVDP.
Okay.
Full OVDP of the penalty base is $100,000, so $27,500. That's pretty good. And then you got to file your missing FBARs on your $10 million account. You do have to file those missing FBARs and 8938s. Now look at your SDOP penalty base. Right? There's your SDOP penalty base.
Wow.
So, hey, only 5%. Yeah, $505,000. Right? So there, I don't care what your taxes are. You're going to go full OVDP in that case. You're going to pay the extra attorney fees, and you're going to go and do that instead.
Right.
Because that's absolute insanity. So that's something you got to watch out for when you're calculating your 8938 penalty base. Now, in this case, I did use, and I think this is our next video going to be the asset, what type of assets go into 8938? It might be the best one to do next.
Yeah, let's do it.
Yeah, I think that's going to be the best one to do because I made a very simple explanation in this case. I just put an interest-bearing account. There's other things, okay? There's other things that can be in that penalty base that you're not thinking of. There could be some stock you're holding on to that or trading that was something that you have unreported income on and that could do the same thing, could throw it way off. So I think it's pretty important that we discuss what kind of things go on the 8938 so that when you're looking at which way to go, full OVDP versus Streamlined, don't automatically assume the Streamlined is going to be the best deal. There's a lot of things to consider.
Yeah, that was an eye-opener.
It's frightening. I mean, it's
really
frightening because somebody could think, oh, Streamlined, yeah.
No. All right. Well, make sure you subscribe to our channel as we continue our FATCA series. We're also going to get into some little more detailed stuff like foreign partnerships, foreign trusts, controlled foreign corporations. So lots of great information coming up. You can like and comment below, and thanks for watching. IRS Medic, the law offices of Parent LLP, real tax attorneys for tough tax problems.